Please don't believe their lies. Don't buy into the S&P 500 because it goes up over time, or buy into gold because it goes up over time, or buy into property because it goes up over time. The reason why those things are going up is not because they are great investments. They go up because the US money expands over time. On average, the monetary base grows by 6.8% per annum. So if your investment does not make at least those kinds of returns, you're actually losing purchasing power. Now, houses on average, they go up by only 5%. So we actually net lose. The S&P 500 returns roughly the same as monetary expansion. This is a long-term chart. This looks at the S&P 500 divided by the monetary base. In investing, we don't just want to blindly bet on our favorite asset and then always buy just property or always just buy the S&P 500. It's best to look at the relative ratios. How is property valued versus gold? How is the S&P 500 valued versus other assets? That matters the most because when something long-term goes up, of course, we want to accumulate the asset that at a particular point in time is cheaper relative to the others. That's something very few people do. Most people have their favorite asset class and they only buy Bitcoin, they only buy the S&P 500, they only buy gold. But really that's a mistake. That leaves a lot of gains on the table. We want to be opportunistic. Everything goes up, but that's just because the monetary base inflates over time. We just want to be out of fiat currency and then invest in the asset class that's actually relatively cheap at the time. To get the full length video, feel free to subscribe over here and then the algorithm will recommend it to you.